Have Trump's tariffs just backfired in the worst possible way? In a shocking financial move, Canada has dumped $57 billion in U.S. Treasuries, sending ripple effects through global markets. And they're not alone. The European Union and China are also starting to cash out their U.S. debt holdings. Is this the beginning of a global rejection of the U.S. dollar, or a warning shot aimed at Washington? Let's break down what just happened, and what it could mean for the U.S. economy, your savings, and the world order. Number 3, it all started with the Trump administration's tariff war, initially targeted at China, then expanded to allies like the EU and Canada. The goal? To protect American industries and bring manufacturing back home. But the backlash has been building for years. Now, the response is hitting where it hurts most: the U.S. bond market. Foreign countries like Canada hold U.S. Treasury bonds as a way to store value and stabilize their currencies. But when trade relations get hostile, that trust breaks down. And now, Canada, one of America's closest allies, has liquidated $57 billion worth of U.S. Treasuries in what many are calling a direct economic response to rising trade tensions and geopolitical unpredictability. So why would Canada take such a drastic step? There are 3 key reasons. First, tariffs. Canada has faced increased tariffs on its exports, especially aluminum, steel, and lumber. This has cost Canadian businesses billions, and they're pressuring their government to retaliate economically. Second, interest rate risk. U.S. debt is piling up, and inflation continues to stay stubborn. If rates go up, bond values go down. Canada may be cutting its losses early. Third, and most importantly, diplomatic trust. The Trump-era policies, combined with rising political instability in the U.S., are making even allies nervous about keeping their reserves tied to American debt. By selling U.S. Treasuries, Canada is hedging its bets and signaling it won't sit quietly while trade penalties continue. Number 6, where things get even more serious. Canada is not alone. Recent financial disclosures show the European Union has slowed new Treasury purchases, and China has sold off a significant portion of its U.S. holdings, more than $48 billion just this year. These 3 economies represent major pillars of global capital flows. When they start offloading U.S. debt, it sends a loud message. Confidence in America's fiscal stability is weakening. China, of course, has its own reasons: years of tariff tension, tech sanctions, and the looming threat of Taiwan-related conflict. The EU is frustrated with America's unpredictable economic stance and isolationist rhetoric. What we're seeing is a slow-motion exodus, a strategic retreat from dependence on the U.S. financial system. So what does this mean for the United States? In simple terms, if fewer countries buy U.S. Treasuries, America has a harder time financing its debt. The U.S. runs massive deficits and relies on selling bonds to foreign buyers to keep government spending afloat. If that demand dries up, interest rates could rise sharply. That means higher borrowing costs for the government, more expensive loans for businesses and consumers, increased pressure on the stock market, and, potentially, a weaker dollar. In other words, this is not just a diplomatic spat. It's a threat to America's economic foundation. For everyday Americans, this could translate into higher mortgage rates, more expensive credit card debt, slower job growth, and reduced investment in infrastructure and public services. If inflation rises at the same time, the U.S. could be pushed toward stagflation, that dangerous mix of slow growth and high prices. And remember, this pressure is coming from allies like Canada and the EU, not just rivals like China. Globally, this move could accelerate the de-dollarization trend. We've already seen BRICS countries, Brazil, Russia, India, China, and South Africa, promote trade in non-dollar currencies. Now, if Western nations begin reducing their dollar holdings too, we could witness a shift toward a multipolar currency world, where the U.S. dollar is no longer dominant. That could alter everything, from oil markets to global banking systems. And it all connects back to the unpredictability of U.S. foreign and trade policy. Whether you support Trump's tariff policies or not, one thing is clear. There are long-term consequences. Alienating trading partners, undermining alliances, and disrupting financial trust can come back to haunt even the most powerful economies. Canada's $57 billion move isn't just a number, it's a signal, a warning, that even friends will start walking away if economic nationalism goes too far. And when China and Europe follow suit, that signal turns into an alarm. The real question now is, will the U.S. leadership listen? Or will this be the start of a global pullback from the American financial empire? Let us know what you think in the comments below. Is this a temporary reaction, or the beginning of something much bigger? And don't forget to like, share, and subscribe for more in-depth analysis of the stories that shape your world.